Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Thomas Castelli. Thanks for being on the show, Thomas.
Thanks, Whitney. Thanks for having me on. It's an honor.
Thomas is a tax strategist and a real estate investor who helps other real estate investors keep more of their hard-earned dollars in their pockets and out of the government's. Thomas holds equity positions in several multifamily properties and participated in a syndication of an 82-unit apartment complex as a general partner. His real life real estate investing experience combined with his ever-growing arsenal of hard-hitting tax strategies allow him to see eye to eye with clients in ways an average CPA never could. And I would agree with that, Thomas. It's nice that you've been on the investing side also and not just on the CPA side. But before that, give us some background on getting into real estate and just your experience as a CPA and how you got into syndication.
Absolutely. So, when I was in college, when I was 18, I really wanted to be a full-time entrepreneur, but somehow my parents convinced me to go to college, and I went to college for accounting. So that's how I got started over there. But as I was going through the years of college, right around my sophomore year, I started to realize, hey, look, I don't like what's on the other side of this. So I picked up the Rich Dad books and went down that rabbit hole like many of us who invest in real estate do. And funny enough, right around that time, my great uncle had passed away. And in his estate was a small house on a relatively large plot of land. And it was located right down the block from the Long Island Railroad, which went into New York City. Very, very good location, prime real estate. And I knew there was something there. So I went to a RIA meeting trying to find someone to help wholesale it. And at that RIA meeting, I actually ran into a group of multifamily investors who were doing a 3-day weekend on syndication. And it was very intriguing. So I decided to go ahead and go to that 3-day weekend before I started my full-time job as an accountant. And at that 3-day weekend, I fell in love with syndication. To me, it just had every part of business and that I loved. And at that same meeting, I met who would become my future mentor. And from there, I made a few limited partnership investments with him as a passive investor. And that eventually grew into me doing partnering up and being part of the syndication with him and a few other folks.
Nice. So, I'd like to elaborate, or you to elaborate a little bit on that relationship with that mentor. You just met him at this meetup. I hear a lot of people ask about, how do I find a mentor? So, what did you do for him to say, okay, I'm going to take you under my wing, Thomas, and help you out, or watch you go through this process or answer your questions? What did that relationship look like?
Well, when I first met him at that meeting, he was also very new to the syndication world, and he had since went through a coaching program. And then we were both attending their monthly meetings. And he was kind of off to the races, finding deals, finding properties. And I went ahead and invested in his first deal. My parents invested in his first deal. And I think from there, it just grew organically. We were at the same meetings all the time. I invested with him, and he said, hey, look, Tom, if you ever find a deal or you have anybody who wants to invest, bring them to me, and we'll figure out a way that we could get you on the GP side of things. So I think it was more of a very natural progression. I don't think there's anything that I particularly did other than just be persistent and just be there and show up. And just show my interest in the business that led to that mentorship. So yeah, it was just kind of an organic thing.
Yeah. So I guess lead us into that first syndication deal and how you got into it and what that looked like.
Yeah. So, I had a bunch of limited partnership investments, and one of the main things that, going up to that first deal that I had to overcome was the fear of not knowing it all, and the fear of, what if I found a deal, but I couldn't raise the money and I'm sitting at the closing table? What if I don't have enough credibility? So kind of all of that, it kind of took, there's a big hurdle that I had to overcome. But finally, when I started to put my foot down and get serious, I ended up making a relationship with a broker in Jacksonville, Florida, who actually found this relationship out from a property manager who was a contact of my mentors. So I called the property manager up and said, hey, look, we're looking in Jacksonville. Who's the top brokers you work with that you sell properties to when you exit, or you just work with in general. And she gave me a few names, and I went ahead and called those names, and from there developed a relationship with one of the brokers who sent me a handful of properties. The first few were kind of the value add component was already taken up, so they're more stabilized deals. But one of them he sent me looked like there was something there. So I did a quick back of the napkin analysis, and was still a little unsure, and ended up sending that deal to the team that I was working with at the time, and ran the numbers with the property manager, and from there decided to go ahead and submit an LOI, and from there is kind of history from there.
Nice. So what was the next thing in your syndication journey? What happened next, and what's your goal going forward in the syndication business?
So from there, we had to raise the money for the deal, and ended up going with a crowdfunding platform to get the deal to the finish line, which was exciting. On that deal, went down, did the due diligence, and that entire thing. And interestingly enough, while we were doing that deal, there was a hurricane down in Florida that hit. So that kind of threw a little wrench in our plans, but we ultimately got across that and got that deal to the finish line. Currently under management. Had a little hiccups with the on-site property management, the on-site leasing agent. But since overcame that, now the property's stabilized, and the property manager, believe it or not, does a lot of the heavy lifting. So on a deal, once you hit those larger deals, that's kind of what occurs. So everything's running smoothly right now, and as of what's next for me in syndication is kind of taking it slow, rebuilding my capital reserves, building up my investor base. And then eventually I plan to make a move to Florida and be boots on the ground and kind of look into, what kind of syndications I could do from there. So now I'm focused on the real estate stuff, building up that investor base. But, sooner or later, sometime 2019, 2020, I'll be back in looking for the deal mode.
Nice. So you mentioned you all use crowdfunding, and could you just, briefly tell us, maybe to the listener that hasn't heard that term before, what is that, and as opposed to what?
So crowdfunding is pretty much, an online platform where a company will help facilitate a transaction for the sponsor. So basically they'll connect using an online platform, the investor, the limited partner, the passive investor with the deal sponsor. And, that's pretty much how it works. And yeah, I mean, that's pretty much how crowdfunding is.
So there's another way to get your capital, I guess. If you don't have your investor database built up yet, that's another avenue you could take, right?
Yeah. One of the issues though, when you're doing crowdfunding is, the money is there for you to get it quicker. Especially if you don't have that investor database, but there's also, it comes with some restrictions. When, a crowdfunding site is coming to backfill, 80 to 90% of the equity needed, they're going to have their terms and conditions, and it won't grant you the flexibility that you have if you were just to go raise the money through your own private network.
So what really is, let's change tracks a little bit and move to the CPA side, and what has been the response, say, from your clients with you already having experience in the syndication business and real estate? I mean, I would imagine it's very good, right? I mean, as opposed to someone that does, a CPA that has no real estate hands-on experience.
Yeah. I mean, it's definitely a positive reaction from a lot of clients, knowing that, I actually understand what they're going through, and it's not just textbook knowledge. It's actually, connecting the theory to the practice side of things. So that's definitely good. And also at the same time, having that knowledge also, gives, a lot of CPAs who don't necessarily invest themselves don't understand how to properly implement stuff, whether or not it's actually feasible for someone to actually implement some of these strategies. So that's definitely a positive, having experience on both sides of the coin.
Nice. So, in the syndication business, what are some tax strategies maybe you could talk about that we need to be aware of that we may not know otherwise unless we get to talk to an expert like yourself?
Well, I mean, I think one of the biggest things to look at when you are doing a syndication is, of course, cost segregation. Usually, when you're syndicating a property, you're syndicating a rather large property, several millions of dollars, and usually, what cost segregation will do is allow you to break down about 20 to 30% of that property into 5, 7, and 15-year lives. And what that does is allows you to depreciate the property faster. And with 100% bonus depreciation, something that was introduced in the Tax Cuts and Jobs Act, you can now depreciate 100% of property with a class life less than 20 years. And in real estate, that's 5, 7, and 15-year property. So if you buy $1 million property and get a $200,000 depreciation expense year one, that's good for both you and your investors, because your investors aren't going to have to pay tax on the income tax on the rental income, should there any be generated, but they'll also be able to use those losses to offset their other passive income. So maybe they invest in other businesses that generate income, or they have other rental properties or other deals they've been a part of as a limited partner that create this passive income. It's a great way to ensure you're not paying taxes on that income.
Now that's something that any LP can benefit from, or is that just if we do cost seg and bonus depreciation?
So the way it would work is, as a limited partner, any rental income that you receive will be taxed at your ordinary tax rates up to 37%. So by using cost segregation study, it ensures, it makes it very likely that depreciation expense will reduce the taxable income of that property to a loss scenario, so that you're not having to pay any taxes on that income, and that would work for an LP or GP.
Nice. So, as an LP, could you just go through some of the tax benefits, or what tax benefits should somebody know as an LP that they're going to gain from investing in a syndication?
I think first and foremost is that when you're investing in a syndication, you're using economies of scale. So you're investing in a large number of units that produce a large amount of income, and depending on how much you actually invest, could be substantial. So basically, what the tax benefit you get is, because of this depreciation expense I mentioned with the cost segregation, it ensures you're getting tax advantage income. So whereas if you work a W-2 job or you have your own active business, you can't necessarily shelter that income in the same way that you can with real estate using that depreciation expense. So basically, the depreciation expense allows you to pay little to no income tax on the rental property income. And if the depreciation expense is large enough and you have enough passive losses accumulated because of that depreciation expense, when you sell that property, it can be used, those passive losses can be used to help offset the capital gain from the sale.
Nice. So it's not going to affect our the taxable amount from our day job. However, it's going to affect what we're taxed on from our income just from rental property.
Correct. And also other passive. So, say for instance, I invest in a car wash as a limited partner. That car wash makes $10,000 of income. If my rental property happens to have a loss of, say, $10,000 or more, that's going to also offset that income. So you could also invest in other things and use the losses from real estate to offset your other passive income, which could be substantial for some investors.
Any other tips, on the limited partner side, or, as that passive investor, any other tips for them that they need to know while investing in syndication on a tax, maybe some common issues or things that those guys haven't thought of, those LPs, that maybe we could make them aware of?
Yeah, I mean, one of the main things is just simply understanding that those passive losses won't offset your active income. I mean, that's just probably the biggest thing. You have a lot of investors out there who go and invest in these rental properties or in these syndications and are looking to take that income and offset their W-2 job or their business income. And they're surprised to find out that when all is said and done, that's not actually possible. So I think as a limited partner, from a tax perspective, the most important thing you have to understand is that you're investing in tax advantaged income. So you won't be paying taxes necessarily on that rental income, but you can't use that to offset your active income. And I think, if passive investors understand that, they'll be in good shape. going into a syndication.
Yeah, I could see that, how a lot of people would think that, if I'm a high income earner, I'm a doctor, an attorney, something like that. Okay, I want to invest in real estate so it lowers my taxable whatever income, right?
Mm-hmm.
So no, I'm glad you cleared that up. So, what are some other common issues? Let's say I'm getting started in the syndication business. When do I contact somebody like yourself? When do I need to hire, somebody like yourself for bookkeeping and or just on the tax side, either one?
I think if you're doing syndication, when you're doing syndication, you're going to be, managing other people's money. And when you're managing other people's money, it's very important that you know what you're doing. And unless you're an accounting or tax person yourself, you're definitely going to want to speak with someone as once you probably have the deal in a contract, I'd say. And I'd say as soon as you have the deal in contract, because, if you wait till, we have plenty of people out there who wait till the day before closing to run to the CPA and say, oh God, what do I do? I'm closing tomorrow. And, CPAs have businesses. They have, their time is allocated in certain ways. They can't always just drop everything they're doing to help you right then and there. So, getting started, talking to a CPA when you get the property under contract, what accounting software you're looking to use. Are you going to do the bookkeeping yourself, or are you going to outsource the bookkeeping to a CPA? And also, what tax strategies are you going to be looking to use on that property? Does it make sense to do a cost segregation study? In most cases, it will. In some cases, it might not. So you definitely, and also another big thing is how you're going to structure that property, especially if you're first doing a syndication for the first time. The structure of the deal could be important from a tax perspective as well. So definitely just want to start as soon as you get the deal under contract, go talk to a CPA if you haven't already.
Could you talk to about the structure of the deal just a little bit and how that would matter as far as, how it relates to your business and on the tax side?
Yeah, absolutely. So there's a number of ways these deals can be structured. Specifically for the GP, you're going to want to make sure that you contribute some sort of capital to the entity you ultimately invest in, so that because what's going to happen is you're going to get, most of the time for GP, you're going to have a promote for doing it. You have the promote for the sweat equity. You put the deal together. You're managing the property once it's under contract, whether it be yourself or through a third-party property management company. And from that, you get fees. You get the asset management fee. You might get an acquisition fee. These fees are going to be taxed as ordinary income. And if there's certain structures you could use as a GP to receive that money in, say, an S corp structure, where you'll be able to mitigate that tax by distribute. Basically, what's going to happen is you're going to have a 15.3% self-employment tax on these fees in addition to your ordinary income tax bracket. So by putting them in an S corp, by receiving these fees through an S corp, you can divide it between wages and distributions and only pay that 15.3% on the wage portion. So, I mean, that's one of the things you look at. And also, you want to contribute capital to that, to the part of the business where you've received the promote, to make it a capital interest rather than a profit interest, which could have some negative effects if you don't do it the right way. So that's kind of the things you'd want to look at as a GP. And also, you just want to make sure you have everything in place for your LPs as well, and make sure that you could, describe, walk through, answer your LPs questions effectively.
So, on the investor side, what do I need to take? What do I need to track? My day-to-day business, what do I need to track? What do I need to keep up with? Is it receipts? Is it, just day-to-day expenses? What do you need to know about, and what do I need to have prepared for you, when I hand you my big folder of tax information?
I mean, definitely, it's definitely always great to have a proper P&L, a profit and loss statement, usually generated from, perhaps a property management software or an accounting software like QuickBooks. That always helps let the CPAs know when they're going to file your taxes exactly what's going on, and kind of having a clear picture of that, rather than just handing over a pile of documents. I mean, that's going to cost you a lot more money, because what's going to happen is, now not only are we going to have to file your tax returns, but we're going to have to create financial statements for you. And that takes quite a bit of time. It will delay the filing of your tax returns, and also cost you a lot more money, which I'm sure your investors won't be happy about. I mean, one of the biggest things as a syndicator, is getting those K-1s out to your investors on time. And if you don't have all your documents organized, you don't have everything in proper P&Ls, that's just going to delay that process. And, investors are going to feel that impact.
Nice. So, Thomas, what advice do you give someone that says, hey, I really want to get into this syndication business, what advice do you give them? They haven't got started yet. And you can answer that from the CPA side or the, syndication side.
Yeah. So, on the syndication side of things, you definitely, if you're just getting started, you definitely want to have a certain base level of education. So maybe you read books, maybe you listen to podcasts, maybe you attend seminars or, a coaching type program. But, education will only take you so far. And that was one of the issues I had. I just thought I didn't know enough. I needed to know more, but you really need to start taking action. And the minute you start taking action, the minute you pick up the phone and start building those relationships with the broker, building relationships with the investors is really where the magic happens. And, also, when you're getting started, and it adds on to the action part, is you want to be persistent. You don't want to give up too soon. Like, deals just don't fall on your doorstep. You're going to have to analyze, dozens of deals, if not more, to find that one diamond in the rough. So, so to me, the best advice is to get yourself educated with a baseline education, then start taking action, and don't stop until you find a deal. And don't let, if you keep analyzing deals and can't find the right one, don't let that discourage you. Eventually you're going to find the right one. So just educate, take action, and keep going.
What was the hardest part of the syndication process for you in that deal?
The hardest part was raising the capital. For me personally, at the time, I was still in my mid-20s, didn't have a huge capital base, wasn't raised in a family that had a lot of money or had friends that had a lot of money. So that's what ultimately partially led to us having to go with the crowdfunding platform is raising that money. People always say, well, if you have a good deal, money will just come to your doorstep. The money will find you, which is maybe true if you already have that base. I mean, if you already have that investor base established, then if you have a good deal, you send that out to your investor base. Someone, you're probably going to be able to find that money. But, I guess so. Yeah, the hardest part was raising that money and realizing that you need to have that capital base before you find a deal, because you can't find the deal, have a short due diligence window, and then have to raise the money from scratch. You need to start laying that groundwork with your investor database way before you find a deal.
Nice. So what's been the one thing that's contributed to your success?
The one thing that's contributed to my success, I would have to say, probably working as a team in the syndication side of things. And that's one of the biggest thing I learned from my mentors was that syndication is a team sport. You have a lot of moving parts. You have to find the deal. You have to do due diligence. You have to obtain the loan. You have to raise the money. And, working with a team to do all this just makes everything so much easier. And, especially on your first deal, I needed the credibility of someone who's done this before. And also, the balance sheet of someone who's also, who has the balance sheet to be able to sign a loan, to be that key principal. So working a team, I would have to say, was the number one thing that contributed to the success.
Are you tired of answering emails from investors about when they'll receive their K-1s? Let the Real Estate CPA handle the accounting and taxes on your next syndication, and they'll file your tax returns by March 15th so you can get your K-1s to your investors by the individual filing deadline on April 15th. Not only will this reduce headaches, but it will help you retain investors over the long term by improving investor experience. The Real Estate CPA is now offering a special virtual workshop to the listeners of the Real Estate Syndication Show on how to answer tax-related questions from your investors. Learn more today by visiting therealestatecpa.com/syndication. All right, Thomas, so what's one way that you have recently improved your business, maybe on the syndication side that we can all apply to our business?
Yeah, absolutely. And I would think if you don't have one already, that would be to get a CRM, a customer relationship manager. Basically, what it allows you to do is to store all of your contact info for the investors that you're looking to create those relationships with. You can store all their contact info, what they're looking for, what type of deals they're interested in, when they'll be interested in these type of things. And I think, being organized and having that CRM is going to be key to building your investor database, and also staying in constant contact with them through emails, and just letting them know what you have going on, and also just managing that relationship is overall having a CRM, I think, is key in that area, and is something that I've recently started to build that I found extremely helpful.
Could you tell us what CRM platform you like or that you started using?
Yeah, I've been using, I recently started using Podio, but I'm actively looking for a kind of a different solution to Podio. I think it's great, but there's just so much you can do with it. It's kind of a little bit overwhelming in a sense. So if I had to pick another one, I would be looking for a different one than Podio. But it's a good start. It's a good place to start. Okay,
great. And Thomas, tell the listeners how they can get in touch with you or learn more about your business.
Yeah, I think that the best way to get in contact with me would be through LinkedIn. You could just go on LinkedIn, search Thomas Castelli. I should be one of the first people who pops up. Or you could check out the podcast that we do at the Real Estate CPA, the Real Estate CPA podcast. It's on every major podcast platform. We have an interview with Whitney as well. That'll be coming out soon, so you go ahead and check that out.
Awesome. Yes, and I highly recommend their podcast. I've learned a lot from it myself. And, I recommend you reach out to Thomas and his team and allow them at least assess your numbers and see what they can do for you, and give you some guidance. But I hope you'll go to lifebridgecapital.com and connect with me, schedule a call so I can help you any way I can. Join the Facebook group so we can all learn from experts like Thomas, and you can also see the future guests, so you can submit questions to me and I'll try to ask them on the show. So connect with us, and we will talk to each of you tomorrow.
All right. Thanks again, Whitney, for having me on.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.